There we go. Here we go. And so we're going to go ahead and get started. And we're going to introduce our speakers for this evening.
Definitely. My name is Jason Matthews. I'm President and CEO of Matthews Financial and Insurance Solutions. I'm born and raised in here in the San Francisco, Oakland Bay area, author of the best-selling book, The Age of Self-Reliance. And where I specialize and work with clients are usually through windfall money, either through an inheritance, sell real estate, switch jobs, just retired, or their business have grown substantially. They're trying to figure out what to do with those earnings.
Whoops, it skipped over. Here we go. Hello, everyone. My name is Thandiwe Cato, also a financial advisor at Matthews Financial and Insurance Solutions. My goal is really to help individuals and small businesses reach their maximum potential when it comes to their finances and really feel comfortable. Whether it came from, watching people try to manage and plan their finances, it really was something of a passion of mine to help create that generational wealth.
So let's dive into it. And I think this inflation thing about when inflation is great, especially in this new year. I forgot to say, but Happy New Year to everybody who's on the call. Last year we had everybody who was a guru when it comes to money, but then inflation happens. And I think we hear the word inflation, but let's really get involved with the definition of inflation. The definition of inflation is the rate of increase in prices over a given period of time. Inflation is typically a broad measure such as the overall increase in prices or the increase in the cost of living in the country. Or another way, or a simpler way of saying it, I would say, is when your money doesn't buy you as much as it used to. Is the simplest thing when we say inflation. When your money doesn't buy you as much as it used to. That's for the everyday American can totally understand when it comes to inflation. When we say, man, I used to buy this was this price, and now you're buying it's a lot more expensive. That's called inflation for the layman terms for all of us folks.
Absolutely. And another example is if you were there when gas was less than $1 and now we're over. I just went to the gas station today and I was not very happy. Gas is over $4.50 where I'm at in the Bay Area. For those of you who are in other states, it might be a bit different, but that's just the impact of inflation.
It's crazy when you talk about inflation and gas. Anyway, I know at a certain gas station, I put my card in and I hit the limit of the max you can use for a credit card or a bank card, which is $100. Mm-hmm. And I still don't fill up.
Wow.
So you talk about inflation. Well, before I used to get, I used to not even get comes close towards it. So we're definitely seeing that inflation.
Absolutely. And this is just a diagram. If you look at some of the different things that have had price increases. So if we look at beef, hotels and motels, gasoline, like we said, which you can see that's actually the highest one that we have on this diagram. One thing that's not on there that we'll go in a little bit more detail as well is even the materials used for housing. And so when we look at increases in housing prices and supply and demand, that's also a huge thing that went up. Vehicle rentals. I know I've rented some vehicles and it's been pretty tough finding something for a reasonable price. So you just want to keep that in mind that, the prices that you may even have had like 1 or 2 years ago have been increased. So you might want to adjust certain things to match that as well.
Yeah, especially when you talk like travel. When you talk about travel during COVID, when it first happened, when everyone was staying at home, you could have got a hotel room for cheap. You could have got the vehicle rental. Now the economy, a little squish, a little Saturn or Geo Metro for all those people who remember Geos. Those are going for $100 a day. It's crazy for how much they are. Car prices. I remember I went to a car dealership in October, November, and they said that for Corvettes, you have to put a deposit down of $5,000, but a brand new one is up to $50,000 over MSRP. So even though the manufacturer says it's going to be $75,000, they're selling it for $125,000, $130,000. So because there's just a lack of shortage of Corvettes because of the chip shortage that we're seeing right now.
Absolutely. So if we want to talk about, again, the last few years, which is really starting from 2020, we saw what the role of things like hyperinflation. So typically when we're looking at inflation on a year-to-year basis, we're looking between that 2 to 3% range. Now we've seen rates of almost like 4 to 5%, even more, of how it's impacted some of the prices of the everyday things that we've used. So keeping that in mind, because even though the prices have went up, has the the amount of wages that you've received or the amount of interest that you've gotten on some of your savings accounts or other investments increased at the same rate. So just keeping mindful of that. Like I said, also the cost of goods and services. So all these things that you're used to buying, you start to go to the grocery store and look around and see, okay, this is a completely different price. This is maybe double, or, I don't want to say triple, but a lot more than you're used to paying. So if you maybe spend $100 at the grocery store, you're noticing that based on maybe the grocery cart that you used to have in 2019 is looking a lot smaller now because of the role that inflation has paid.
Oh, T, I know a perfect example. I got my wife like, hold on. You're at a grocery shop. You didn't find no coupons. You need some savings. You need to go to the store. I'm buying things on sale. I was like, no, you're white. You don't know how to grocery shop. And we had a whole argument about it. She said, next time you go to the store. And I went to the store. I was like, whoa, that beef, that bacon. I told my son, you better not leave nothing else on your plate. You better eat everything because the food prices went up so much. So I definitely, it has started family arguments and fights and discussions, I should say, over saying about shopping, because like I said, I was shocked about the prices of groceries a couple months ago until like you hear these numbers, but when you're really in the store and you're buying things, you really understand it a lot better.
You're absolutely right. So let's go on to here.
So what is causing this inflation? The first thing is the money printing. When COVID first happened, the whole economy shut down, the world shut down. And we had all the stimulus plans throughout the world. And for the United States, 40 to 50% of all of our money that has ever been printed has been printed since over the last 2 years. Also due to COVID, right, has been supply chain issues where certain products, it's hard to get certain products to go to one place or another. I remember last year I had to get a new sofa and it took forever to get the new sofa because of supply chain issues. I ordered the sofa in 2019 in October, and I couldn't get that sofa until April. And that was from Macy's, which is a well-known company, all because of the supply chain issues. Then also what we're seeing now is more and more product shortages. So when we go to the grocery store, we've seen the grocery stores are empty or shorter things. When we first had COVID first happened, remember everybody was short on toilet paper. So we had product shortages. And then last thing is just the labor shortage. You go to Wendy's, you go to a doctor's office. I heard this morning, New Mexico having a teacher shortage. So it's not just low paying wages, but we are having labor shortage in all aspects for us. Nurses, a lack of nurses, drivers to drive the things there. So it's making a bigger issue for the supply and product change. So we're overall are having shortages, and then we had all this money, and it's just a simple supply and demand. Right? The more demand you have and less supply, the price will automatically go up. And that's what we're seeing right now, which is causing inflation.
Absolutely. And just to add to the labor shortage, it's just like, whenever you go to Wendy's, whenever you go to a restaurant, I know I've definitely experienced that where sometimes you get frustrated because people aren't attending to you, there's not enough staff. But at the same time, it's just like overall, what we've seen is just, we just don't have enough people who are willing to work at certain jobs. So that's one thing I always see, for hire signs at all these different businesses. And I'm wondering, where do the people go? I'm not sure.
We had a massive amount of, they say we had a massive amount of people who have quit their jobs, but we also have a massive amount of people who have started businesses, they're saying. So that's a great thing for us starting businesses in this great shift that we're going through. And there is some pain right now. I go to Wendy's and they say, hey, you can only go drive through only. But if you're looking for a job, you can get a job. If you ain't working, it's because you don't work right now, because they are paying and they will hire you just if you have a pulse and you can breathe in the mirror, you got a job. So there ain't no reason why people ain't working right now, because you can find a job if you want one.
That is very true. All right, so as we start to talk about, I'm gonna put this up a little bit more. Who does this impact? I'm going to briefly talk about some of the groups that the inflation rates, inflation has impacted. So when we talk about elders, so these are typically people who may have more conservative investments. So let's say things like CD accounts, savings accounts, things that are paying lower interest rates. So because they're getting less of a return on that, that's impacting how much retirement income that they're receiving. So, I mean, I'm sure most people who are at that stage in their life are wondering, okay, well, how can I still get the return that I was getting before, but not take as much risk? So that's a huge thing for elders. And going back into savers, so if we look at the savings account rates, maybe prior to 2020, you could still find a savings account or a high yield savings account that was a little bit over 1%. Now we're seeing that they're 0.5%. So it's really not a great return for just keeping your money in there. So that's also impacted people who are savers as well. Potential home buyers. So for those folks who are looking to get a home and maybe also you're looking at getting a mortgage, if the interest rates are going up, it's just the cost of money. The cost of that house is also going up as well. So at the beginning of 2020, when a lot of people thought the housing market would go down significantly, it actually went in the other directions, and interest rates at that time during 2020 were fairly low. Now in 2022, we're starting to see that the interest rates for these homes are going up, and people who were maybe on the fence about buying a home, they either should buy it now or they may see interest rates continue to go up as the year goes on. When it pertains to homeowners, again, this goes more into if you're looking at refinancing. I know I had some people who are looking at to refinance in 2020. Now they're, maybe if they didn't do it already, now they're kind of getting, again, a little bit iffy because it may not make sense based on the rate that they've already had. And then as far as business owners, it's just kind of the cost of debt and any expansion that they're looking for within their business. And then last but not least, just our everyday Americans, and we'll go more into detail on that as well, but just understanding what the cost of money is and what the new cost of those goods and services that we typically use on an everyday basis.
So let's first talk about elders. When all my clients are retired or older, one of their favorite phrases are, "I'm on a fixed income." That's like the phrase that they love to say, which is often a true fact. So here's some strategies for our elders, our seniors, people who are getting ready for retirement on what can they do for smart, sound strategies. One thing they should do right now is look at their CDs, their savings, their money markets, and annuities, and other safe money, and see if they should start shopping for better rates. Right now, what we're seeing is a lot of places are giving out teaser rates and are already raising their rates, which is a great thing. So, for instance, you might have your money at the bank, it might give you 0.02%, but now you might go to a 0.8 or so on and so forth. Also, you should consider moving your money from savings and CDs and money markets to fixed annuities. Right now, as we're currently talking, the average CD that's 2 years is giving you 1%. But if you do a 2-year annuity right now, you're looking at getting 2 or 3%, which is 2 or 3 times more than what you're currently getting on the same safe money. Another strategy you can do, which I recommend, is to consider doing a bond or an annuity ladder. What a bond or annuity ladder is saying this: I have an annuity, especially for my clients who might have an older fixed deferred annuity or a fixed index annuity. How it works is you might have a fixed annuity right now that might pay you 1.5 or 2%. I know you might have a surrender charge in that period, but even if you do, what you could do is take out 10% of that free look period or 15% make sure you confirm with your insurance company, and then take out that 10 to 15% free look and buy another annuity that's going to get you a higher rate. Then every year you could do that with your free surrender charge, buy a brand new annuity that might have a higher rate. And with the bonds, what you can do is go by the maturity date. So the longer that a bank or a financial institution has, the higher the rate is going to be. So what you can do is get a bond that's a 1 year, 2 year, 3 year, 5 year, 7 year bond, and spread all your money out over that period of time to also fight inflation. And the last thing is good benefit for our elders and people retired is we see Social Security has drastically went up. This is the biggest Social Security benefit that retirees have seen in over a decade because of inflation. So your check that you just started to receive is a lot higher than you did last year. And with inflation, you're going to continue to see that because Social Security payments are based off of CPI and inflation rates. So right here is an example of the bond rate that I mentioned. So bond A right here is 20,002%. Bond B has a 0.75%. Bond C is 1 point. So as you can see, there's a ladder, what we call every year. So as your bond expires, you go ahead and buy a brand new bond. And the longer you have the other bonds, they will grow and we can ladder them for they can grow and mature. And every year that you get your principal back from that bond, you could go ahead and reinvest into a new bond at a higher rate.
Definitely, this is a great example. Like you said, I think a lot of people sometimes, if they do have an annuity product or a product that, they don't look at the surrender period or when they can start to shop around for other options or better rates. And even if they haven't reached that surrender period yet, there's still options to take out some of the money with penalty. So just make sure that you're at least getting some other options in front of you, especially if you just kind of left it there and forgot about it. It's definitely something to continue to review. So as we start to talk about potential and future homeowners, so if you, one option is what to expect is locking in those interest rates if you can, if you haven't had your home built yet. So a lot of new development is also going on. So if you can get a guaranteed rate prior to the actual house being built, that's a great way to lock in that rate, because the thing is, if the market is going up as far as interest rates for housing, you want to make sure that you don't start the build, you haven't locked in the interest rate, and then all of a sudden, they're talking to you about a 7 or 10% rate that you're committed to. Like, not saying that it's necessarily going to go that high, but it is saying that you're leaving that up to chance if you're not able to lock that in beforehand.
That's a great point.
Yeah, go ahead.
Yeah, Thandiwe, that's a really good point. I was talking to one of my clients. She put down a deposit for her house is getting built, and in her house it says it's going to be ready in May. So they're saying. So I told her they just announced today that they're going to raise interest rates in March. It's going to be the first one to get raised. Instead of waiting, we know that they're going to raise interest rates. Let's go ahead, talk to who's doing the financing now, lock in that rate today for that house, even if it costs you a little bit, because even if you are, for the long term, it's going to save you a whole lot of money. Also, if you're basing it on when your home's going to be built and it's a new home purchase, we just talked about there's a supply and labor shortage. We have a lack of construction workers and a lack of getting our supplies. So it might take longer than they tell you for your house. Oftentimes, we try to tell people great news is going to be done faster than we expected. When reality is we lack the control of time when we're going to get things. Maybe you might be having a shortage of wood. Maybe they have a shortage of light bulbs. So it might delay the process or submit for your home to get built. Lock in that rate right now, because we know the man who controls money just said in March you're raising rates. So let's be mindful of that.
Absolutely. And speaking of being mindful, we also, when we talk about refinancing, again, for those who have not yet refinanced, make sure that in comparison to your current mortgage, it actually makes sense. So if even if it's a few points or like a small point percentage difference, will it even make sense if you're looking at the cost of like closing costs and other things like that? So whenever you do refinance, technically there is a portion of equity that is taken out of your home. So if you're looking at that, in addition to maybe not having the best comparable rate to save money, then it may not be a great option for you. So you just want to make sure you actually have the comparison and some solid numbers before moving forward. And if you had locked in, let's say, a 3% rate, and we know that rates are going to go up, you know, let's say they go up and your loan officer comes back and says, we can only refinance you at a 4% rate. Well, you shouldn't be doing it because it doesn't necessarily make any sense. So just make sure that you've done the numbers and it makes sense. And if you do have what's called an adjustable rate mortgage or an ARM mortgage, consider, if you have the option to, consider doing a fixed rate, because again, it's just going to be going with the market. So even though at one time, if you have an ARM rate at a 3%, it goes all the way up to 6%. After that time period is over, you have to pay that percentage. So if you can lock it in and kind of freeze that time rate of money, that's a great way to do it. And one thing I will add to that as well is when we think about the housing crisis in 2008, 2009, that was a huge variable of people not really understanding adjustable rate mortgages. So of course they come in, they're like, okay, I can afford this. This is fine. And then all of a sudden the market changes and their payment, maybe your payment was $1,000 and now it's $2,000. And that's significantly more of your budget. So now you're in a position where you're losing your home. So you just want to make sure you really understand how your rate works. And the last thing I'll add for potential and future homeowners is just really understanding the cost of, getting any home renovations done. Like we said earlier, the cost of supplies and goods and labor have all gone up. So while we're, getting more comfortable in our homes, and a lot of us who have now transitioned to working from home have wanted to be in a more comfortable space, we have to be mindful that the cost of these renovations are going to be a lot more than they were before.
So true. So true. My mother, she had flooding in her house, and again, the insurance is taking care of it. Her refrigerator had water and it leaked, and she to get her she got to get a lot of work done because of the insurance claim. But the insurance company was even shocked at first on how much it would have cost. They're like, there was another bid, and they got the other bid, like, whoa, right? So be mindful of that. And if you're gonna make those changes, I would tell you start sooner rather than later. It seemed like inflation, the first they say is going to be temporary, and now they're finally, the Federal Reserve and every smart person in the world is saying the $5 million is not going to be temporary. We're going to be in this for a while. So Go ahead and do it now before the price of everything keeps going up. I'll tell you this in June. So let's talk about you business owners, right? What are things that we should consider right now with it? One thing we should consider, rates are affecting the cost of borrowing money. Oftentimes we borrow money to make payroll, to pay things while we're waiting for our money to come in, but consider that the rates that you're going to affect you. One thing we have to really be worried about or cautious of, I wouldn't say worried, but more cautious of, is a line of credit right now. Oftentimes when we do line of credit, those are variable rates, and those rates can go up. So consider that. Also, what inflation might do because of the cost to service that debt is that it might limit our business expansion because it's going to cost us more to service the debt. And we have to consider, will the cost of servicing that debt, will we get our reward or our rate of return is going to be more worthwhile where we can pay off that debt and expand our business. Also, there might be restrictions on how much you can borrow, because if banks will raise their interest rates, they might also lower their limits down. They always have the power and control to lower rates, especially if they feel like you cannot afford to pay it because now you're paying for more debt. Last but not least, there's going to be more documentation. We came from a period where it was just a lot of free money. There's a lot of PPP money, a lot of EIDL money for a small business owner. Get ready to go back to show full documentation to show that your company can pay the money back. We just got to be more conscious of that. So they're going to ask you for more tax returns, more receipts. They're going to see your P&Ls and all that other good stuff.
Yeah, no, that's a great point, because I know I've definitely heard of some folks who maybe got some PPP money that they weren't supposed to get. So again, be mindful that it is a loan. There are ways that you may not have to pay it back, but if you are just getting the money to get the money, and you don't have a business and you know you shouldn't be doing it, they may be coming after you. So keep that in mind too.
I don't know you if they come after you. You never heard
Right.
my name.
So last but not least, we just want to talk about everyday Americans. You and me. How is this really impacting how we use money? And so the main thing again is just like you may see a increase in the cost of goods, but not necessarily an increase in salary. So let's say, let's go back to the example of going to the grocery store. Okay, now my groceries that I used to pay $100 for are now $150. Does that mean my salary went up the same percentage? It probably doesn't. So just being mindful of, okay, I either need to be getting less groceries or I need to be making more money by finding other sources of income or even an increase in your current job or salary.
With this labor shortage, Thandiwe, one thing that people could do is start asking for that raise. Start looking for other places for hiring right now. If there's a labor shortage, there's somebody who's going to pay you more than you're normally used to, and you'll see that. In-N-Out's paying $20 an hour, right? While before it was paying minimum wage. So this might be the time for you to ask for a raise or start putting together your resume and look for more opportunities.
That's absolutely true. So if you haven't talked to your boss or your manager yet, make sure you do that and take advantage of the situation so you can get paid a little bit more money. The next thing is just lower interest rates on savings. So it's making one of the worst optimum returns. So I'm not a hater against savings account. Well, sometimes I am. But the point is that, you do want to have savings just for liquidity reasons, to have access to money. So if, a bill comes up, the money's not in your checking account, then you can just go ahead and pull it there and it's accessible. But when it comes to putting almost too much money outside of, a certain amount of your expenses, then it's like you're missing the opportunity cost of missing out on some of those other things, other investments that can get you a higher return. So just being mindful, because it doesn't look like interest rates on savings accounts are going up anytime soon. As far as borrowing habits, if you're somebody who uses your credit card frequently, who's using lines of credit, if the interest rate is going up on those, it's more expensive to borrow that money. Another thing is, a lot of times when we see a lot of uncertainty within the market, we start to see banks and financial institutions limit the credit that we can have access to. So again, if you're using your card and the bank gets back to you and says, hey, you're using too much, we're going to have to take your credit limit down from 20,000 to 10,000. You have to make sure that you're adjusting to that, as well as keeping up with those payments. So another option is just to, if you have a lot of debt payments, and let's say there are a bunch of credit cards that you've put things on, you want to see if there's any opportunities to refinance that debt onto, let's say, a personal loan that's going to, give you a lower rate that you can pay on that money. So it's just decreasing the cost that you're paying to borrow. Is there anything you wanted to add to that, Jason?
No, that's a great point about the personal loan. People forget that credit cards are variable rates. So if the Visa, MasterCard, or Capital One, or American, or any of them needs to want to raise the rate, they can choose and decide to. So I like things to be safe and guaranteed. So if I have a fixed personal loan, I got this money locked in. I know how much I'm paying every single month compared to a variable rate, which might get out of hand. So if you can't pay off those credit cards, consider getting a personal rate. Talk to like local credit union or bank to get locked in a good personal loan rate right now.
That's a great point. I mean, like if you can go to your local bank or your credit union that you already have a relationship with, it's a great opportunity. I know some banks, it's a little bit harder to find personal lines of credit. There are some options on the internet. You just might want to be a bit more careful in making sure that you get a competitive rate when you go through that process.
So true. So true. I think my bank right now, even just for personal loan rates right now, it's crazy, like 4 or 5% right now, just on a personal loan rate. So
okay, you might have to let us know where you bank. That's a good
One of my banks, I give them a special shout out. So they have a special personal loan offer right now, 3.49%. And this is Unified Credit Union. So Unified Financial Credit Union. Give a shout out to Delisha Whitaker for that one. They do really good work.
Okay, you heard it here first. Well, as we go ahead and wrap everything up, we just want to put our contact information up as well. So if anyone has any questions, we're going to leave a little bit of time just for questions. But definitely, we do these workshops every other month, and our goal is to be able to provide information and education to everybody, because a lot of times there's so much news and different topics. We want to make sure that we're picking something relevant and something that everyone can learn from. So again, I'm very excited to have this topic as one of the first topics that we've had for this year, and also to be able to educate people about, maybe they've seen things about inflation and haven't really understood what that means or how that impacts them. So I'm glad we're able to, go over a few points this evening.
Yes, yeah, I think it's our mission to really just educate the community about money and finance. I think we get these things and it's very confusing when we hear these big words, inflation, and other things. And what we really want to do is just simplify it, make it basic and easy for you to understand, and just really just educate you guys. In the future, is there any subjects you would like to hear from us talk about throughout this year? And if so, just put that in the chat. Is there anything you might want to hear from us look on throughout the year? You're welcome, Gail. We appreciate you, Gail, for getting on the call.
Thank you.
Definitely appreciate that. We want to come up with hot, fresh topics. It's going to be a very busy year as far as what's going to be happening in money and finances. So let's go ahead and just really stay. We want to keep you guys abreast. I think if we're ahead of the game and have the curve, and we know what's happening, we can make the best decisions for ourselves, our family, our business, and our community.
Absolutely. And I do have one question for Jason.
Yes.
Jason, I guess from what you've seen, especially going on with the Feds today, where do you see things going as far as interest rates in 2022 that we haven't seen in 2020 or 2021?
So if you look back on the if you see, they're saying they're going to raise it 3 times. Jerome Powell did, and even without him saying it, interest rates are creeping back up. So to give you guys an example, so the bottom of the 30-year mortgage was at January 7th, 2021. It was at 2.65, was it for 2021, January 7th, 2021. Right now, even with them not raising the interest rates, we're currently at 3.56 is a 30-year mortgage average in the United States. So I think the Federal Reserve is going to raise interest rates 3 points, but I think the market is going to buffer it and get that as well. We're going to see a lot of volatility in the stock market this year. I won't say there's going to be a huge drop, but we're going to have days where we're seeing right now where you see the market do huge drops and bounce backs. So even tomorrow, we already seen futures for the Dow Jones average is going to be 400 points. The future is right now down 1.2%. Also, what I see, because the interest rates, is that I think a lot of tech companies and other companies have negative cash flow. They're going to have issues with servicing their debt as interest rates raise. That's why a company that was big on during COVID, Peloton, is now having a huge amount of drops. And we're seeing that with a lot of the IPOs that came out over the last couple of years who have negative cash flow because it's going to cost them more to service that debt, which is going to put them, a lot of them, in dire situations. Some might file for bankruptcy. Some might merge. I always thought that Peloton would be a great company for Apple to buy. That was one of my predictions, which I was wrong for in 2020. So I know nothing. We all know nothing.
It's not too late.
It is not too late.
It's not too late, so we never know. I think one thing that we've learned over the past 3 years is, we make all these predictions, and again, even with this presentation, this has actually happened, but we make all these predictions, and it's really quite uncertain what could happen and how things can take a turn. Even though it's predicted that, yes, we are going to see an increase in interest rates, how it could affect the market could be different than predicted. So just being mindful of ways that, again, you can lock in rates or try and make certain things more certain than they are. It's never technically really going to be a guarantee, but there are ways that you can manage your portfolio and manage your assets to hedge some of the risks that may be coming up this year.
Big time. I think it's a lot. I'm a big football guy. This is a great time of year for football. And I think with football, we always hear about these super attractive players, the Aaron Rodgers, the Tom Brady's, right? But at the end of the day, when their fundamentals are wrong for their football team, they all lost last weekend. So Tom Brady is the greatest quarterback of all time, but his offensive line couldn't block because most of their players were injured. And so they lost the game because their fundamentals was messed up. So I think we have to continue to be fundamentally sound. And I know we hear a lot of sexy things, out there, but as long as our foundation is strong, we could do those sexy things and those exciting things. But the problem, I think, with a lot of people is they're not keeping their foundation intact. And that's why I think this is really good for this call. Football is about blocking and tackling is the most important thing, and having your foundations right in money and finance is the most important thing before you get all these sexy things. If you put all your money in and at the very peak of Bitcoin, you're down 50%. Ask Odell Beckham, who's a football player, put his whole salary in Bitcoin, who's lost so far, and he now has to wait it out until it bounces back, which we don't know when is going to happen.
Absolutely, that's a great point. Well, if we don't have any more questions, we're going to go ahead and log out. Again, for those of us who, if you've attended, you'd like to connect with us on a one-on-one basis, we will also be sending out an email with our information and how to set up an appointment. Again, I'm sure you've maybe come to this presentation and found a few things that apply to you, but if you'd like a one-on-one, we'll definitely send that information out as well. So with that said, happy Wednesday? Happy Wednesday.
Happy New Year.
And happy New Year's. Thank you, everybody.
Thank you.